Another week and another IPO. If you are following my IPO reviews, I reviewed Clean Science and GR Infra project and both got listed at bumper valuation. Clean Science was listed at a premium of 76% on day one of its listing, and GR Infra project was listed at a premium of 108% on day one of its listing. Now this time it is an API manufacturing company and the company name is Glenmark Life Sciences. So we will review this IPO and decide if it is worth applying for the IPO or not. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. As usual, we'll cover the Glenmark Life Sciences IPO by understanding more about the company and its business, its key strength, competitors, key risk, future growth potential and financials. Then we will look at the IPO details along with valuations. Finally, we will conclude if Glenmark Life Sciences is a fundamentally strong company or not, and whether it is available at right valuations or not. I will tell you my verdict on the IPO and whether I will apply for the IPO or not. Alright, let's get started. Incorporated in 2011, Glenmark Life Sciences is the leading manufacturer of active pharmaceutical ingredients, that is API. So APIs are the key ingredient in any medicine. It is the wholly owned subsidiary of Glenmark Pharmaceutical Limited, which was established in 1977. So it has got a strong promoter base. The company manufactures high quality APIs for cardiovascular disease, central nervous system disease, pain management, diabetes, gastrointestinal disorder, anti-infectives and other therapeutic areas. It further operates in contract development and manufacturing operation to offer services to specialty pharmaceutical companies. If you look at the business breakup, 84% business is from generic APIs and 13% is from contract manufacturing. Company has 4 manufacturing facilities in Gujarat and Maharashtra with a total production capacity of 725.8 kiloliter as of December 20. Company has a portfolio of 120 molecules. It also exports the APIs to all over the world, including Europe, North America, Latin America, Japan and so on. If you look at the key strength, its first strength is leadership in APIs in chronic therapeutic areas. Glenmark Life Sciences is a leading developer and manufacturer of few high-value non-commoditized APIs in chronic therapeutic areas including cardiovascular system, central nervous system, pain management system and diabetes. Its second strength is strong relationship with leading global generic pharma companies. Over the years, Glenmark Life Sciences has built a strong relationship with some of the leading generic pharma companies. In fact, it works with 16 out of 20 largest generic companies globally. Some of its key customers include Torrent Pharma, Aurobindo Pharma, Teva Pharma, Glenmark, etc. Third strength is focus on R&D and quality. Glenmark Life Sciences has a total of 39 patents granted and 39 patents pending for approval. It has been inspected multiple times by top regulators including US FDA on a regular basis and did not receive any warning letter or import alerts. This signifies the quality of their work. Fourth strength is experienced management. Their MD and CEO Dr. Yasir Razvi has over 2 decades of experience in global API industry. Their operation team is headed by Mr. Vinod Nayak, who has over 2 decades of industry experience. Their CFO, Mr. Bhavesh Pujara, has over 15 years of experience in finance. So overall, a very experienced management team. If you look at the listed competitors of Glenmark Life Sciences, it includes Divis Lab, Laurus Lab, Shilpa Medicare, Aarti Drugs, Solara Active Pharma, etc. Clearly, there is a strong competition for Glenmark Life Sciences. If you look at the key risk, its first key risk is that pharma sector is highly regulated. Company has to always comply with the strict regulation from various regulators including US FDA. Any failure in compliance could adversely impact the business of the company. Second risk is revenue concentration risk. Glenmark Life Sciences top 5 customers contribute more than 50% share in the revenues and the biggest customer is its promoter Glenmark Pharma. If any of the top customers discontinue API purchase, then it would significantly impact the business of the company. Third risk is dependency on China for key starting material, that is KSM. Company import a significant portion of KSM from various vendors in China. Its three largest vendors contribute 40% in total purchase. Any disruption in raw material supply would impact the business of the company. Fourth risk is competition risk. Indian API market is highly competitive and there is always a pressure to reduce the cost to stay competitive. If you look at the future growth, the total market size of APIs where Glenmark Life Sciences operate is estimated to be around $140 billion in 2020 and is expected to grow by about 4.3% over the next 5 years to reach about $180 billion by 2026. The future growth of these products is expected to remain stable, driven by increasing diseases like heart disease, stroke, cancer, diabetes, and chronic lung disease. Then there's a growing demand from the regulated market for drugs required for hypertension, diabetes, cancer, etc. And next growth driver is aging population. Moreover, there is a growing demand for contract manufacturing in customized and generic APIs due to specialized technology requirement, which leads to the outsourcing of these products. On top of that, India is the only country after China with low-cost manufacturing capabilities. Due to strict environmental control measure in China, many licenses have been suspended in China, leading to lower supply. This has created huge demand for Indian companies from all over the world. And that's where companies like Glenmark Life Sciences would have advantage. Even the Indian government wants to reduce dependency from China for API import and encouraging API manufacturing in India as a part of Atmanirbhar initiative. Company intend to increase its API manufacturing capability by enhancing the existing production capacity at Ankleshwar facility during FY22 and the Dahej facility during FY22 and FY23 by total installed capacity of 200 kiloliter. This additional production capacity is expected to help them further expand their generic API production and also grow their oncology product pipeline. Glenmark Life Sciences intend to develop a new manufacturing facility in India for manufacturing of generic APIs from FY22, which is expected to become operational in the fourth quarter of FY23. So clearly, the future looks bright. If you look at the financials of Glenmark Life Sciences, its revenues have grown from 886 crore in March 18 to 1885 crore in March 21. So that's more than doubled in just 2 years. Its profits have grown from 195 crore in March 18 to rupees 351 crore by March 21. So both revenue and profit growth are looking good. If you look at the profitability, its operating margin is in the range of 25% and latest return on equity stood at 38%. Hence, profitability is also looking good. If you look at the borrowing, the company is completely debt free. Please note that this excludes the amount payable to the parent company. Glenmark Life Sciences IPO window is between 27 July to 29 July. The IPO price band is between 695 rupees to 720 rupees. The shares are available at face value of rupees 2 and one lot is of 20 shares. So total investment for one lot would be rupees 14,400. Issue size is of rupees 1,513.6 crore. Out of this, there is a fresh equity of rupees 1,060 crore and remaining rupees 453.6 crore is offered for sale where promoters are selling their stakes. Majority of money raised from the IPO would be used for payment to promoter for the spin-off of the API business from promoter into the company. Then the company would use some money for funding its capital expenditure to expand its manufacturing facility and other corporate expenses. Now the most important part, that is valuation. At a price band of rupees 720, the company would be valued at a PE of 25. If you look at the industry PE, the PE range is between 11 to 70 with average PE of 31. So at a PE of 25, Glenmark Life Sciences is looking very attractive. At rupees 720, the valuations of the company would be around rupees 8,800 crore. If you look at the grey market premium, Glenmark Life Sciences has a current GMP of around 40%. This suggests that there are high chances of solid listing gains. Overall, if we conclude, Glenmark Life Sciences is a subsidiary of Glenmark Pharmaceutical. It is in the business of API manufacturing in the area of cardiovascular disease, central nervous system disease, pain management, diabetes, etc. It has a very experienced management team with strong relationship with top generic pharma companies in the world. Although there's a strong competition to Glenmark Life Sciences. The future of API industry in India is looking very bright on account of rising lifestyle diseases like heart attack, cancer, diabetes, etc. Then, due to shutdown of manufacturing facilities in China, India has emerged as a strong alternative due to low cost manufacturing and vast experience in the pharma industry. Even the Indian government want to reduce the dependency from China and encouraging domestic manufacturing. The financials of the company are looking good. At a price of Rs 720, the P ratio of the company would be around 25, which is looking reasonable. Overall, a good company available at an attractive valuation. So personally, I would be applying for the IPO. What is your take on this IPO? Do let me know in the comments. And if you also want to learn how to do the fundamental analysis of a company to identify the multi-bagger stocks, I have curated a complete course with 100+ videos. I also take live doubt solving sessions. This course also includes every aspect of money management, including mutual fund, insurance, tax planning, etc. There are already 4,000+ enrollments in the course. My website link is in the description box. I will see you with another video. Till then, take care.